The sales rep called. We didn't even ask for it, which was kind of surprising. I've never had that happen where they said, hey, we're going to knock off another $15,000 off your sales price. So we saw a lot of buyers, though, for a short time period there not qualify for a new build that they were under contract on, again, because rates went up within that 12, 14, 16-month period that their home was being built. So it's just something to take into consideration, guys, that, the biggest factor at play right now is we are being forced into a recession. The housing market, the overall economy, everything got highly stimulated over the last couple of years with money being dumped into it, interest rates being at all-time lows to push us through this pandemic. And now, unfortunately, it is catching up to us slightly. Again, I want to make it clear, though, it is not a housing market crash. People still have tons of equity in their homes right now. That's the biggest factor we're seeing right now, unfortunately. A lot of people are faced with the decision of, do I sell my current house with a really cheap interest rate, or do I sell it and go buy something else? Now, there's going to be people that have life situations that are still going to be, requiring them to move. Could be divorce, could be marriage, could be job transfers are requiring it. All of these factors are at play, but your traditional buyer that was just selling because they were kind of tired of their house and financially it was great sense, right? Interest rates were low. They had a ton of equity in their house. They could go get into something new or larger, better area for not that much more per month. And it just made sense. Those guys were moving. That family's on pause now. Sometimes it just doesn't make sense for them. Like I said, they're in a low interest rate, and what housing prices are now compared to what they owe for theirs, it's just not lining up, so they may not be moving. That's what's causing the market to kind of pause a little bit right now. That's what's causing inventory to build up. That's what's causing less buyers in the market combined with affordability. We do predict that that's obviously going to change. Nothing stays down forever, just like we couldn't have experienced the last 2 years of, 20+% equity year over year going up. It was completely unrealistic. So now the tables have kind of turned and the market's going to do its thing just as it has over the last, century. It's going to go down. It's going to go up. It's going to adjust. We are in a downward phase. Now, the good news is, guys, if you are a buyer, now is your opportunity. There are some absolutely incredible deals out there. Even with rates being a little bit higher, we're seeing people be able to negotiate houses down 30, 40, 50K. We're seeing price cuts out there as sellers become a little more realistic with the market, realizing they can't push it. We're seeing a lot of sellers do price cuts right now, and you're able to get houses for 20, 30, 40, 50K. I've even seen a couple price cuts of almost $100,000 lower than where they were, where on the other side of the table just a year ago, you would have been paying $20, $30, $40,000 over for that house when inventory was extremely low. Even with the low interest rate, let's say you're assuming you're paying, 50 grand over ask for that house, where now you can get that same house for 50 grand under ask. It's almost a wash on your guys' payment. Another thing that we're actually advising a lot of our clients to do right now when it comes to the closing table is, with rates being a little bit higher, sometimes it doesn't make sense to buy down the rate. Now, again, consult with your lender. They're going to know best for your individual situation and tell you what to do. You may need to buy down the rate to get your debt to income where it needs to be monthly. But ultimately, one thing we are speculating is that rates are going to come back down again. When that's going to happen, nobody is certain. We're projecting it's probably not going to be until going into quarter one, quarter two of next year. We see a little bit of relief and stabilization. The Fed has made it known right now that they are still trying to curb inflation. They are still expecting to raise the federal rate hikes, which in return is going to have a little bit of effect on the housing market interest rates in most cases. So we're expecting that to continue, most likely for the next 6 months, maybe 8 months, possibly. Again, things could change, as we saw in the last 2 years. Things change really quickly, but that's what we're estimating based on current market conditions right now. So if you do buy a house, you can get an absolutely phenomenal deal. Save that money instead of putting a large chunk down to buy down rates. If you guys don't have to, wait for that rate to come down, and then when the rates come down, refinance into a better rate. Now you got a great house under market value when the economy was slowing a little bit, and you can refinance into a cheaper interest rate.